Kitco Mining's special coverage of the Precious Metals Summit in Zurich is brought to you by Wiesla Copper.
Are we $15 from a gold breakout? This is Paul Harris for Kitco Mining at the Precious Metals Summit in Zurich, Switzerland. To help me answer this question today is Florian Grummes of the Midas Touch. Florian, welcome to Kitco.
Thanks for having me, Paul.
Florian, let's start off with a quick summary for our viewers of what is the Midas Touch.
The Midas Touch Consulting is my company. I'm the founder and the managing director. We are an independent consulting and research company focused on precious metals and on Bitcoin and digital assets. Personally, I'm in financial markets for the last 28 years already, and precious metals for 23 years, and in Bitcoin for 10 and a half years.
Now, you spoke this morning at the conference. Can you run through some of the highlights for us of the messages you gave to the audience?
Sure. So mainly it was a technical analysis kind of presentation on gold. So I gave an overview of the big picture, basically. We looked at what happened over the last 23 years. We had a big bull market from 2001 to 2011, when gold went up more than 650%. At the same time, silver went up more than 1,200%. And we had an important top in the summer of 2011, so that's 12 years ago. And today, gold is trading at 1950-ish. So we are basically $30 higher than 12 years ago at that all-time high. So obviously, it's been a very frustrating kind of like 12 years for most of the gold bucks who are fully invested or who kept buying, hoping that we're going to see a bigger move in the precious metals prices and in the underlying stocks. But after this long-term consolidation, we are now actually seeing a situation in the gold market where I think we're very close to the breakout above $2,000 with a monthly close. So that's what you said initially. It doesn't take much. Gold needs to close on a monthly basis above $2,000. It hasn't happened yet. And in my presentation, I showed this morning that back in 2009, so 14 years ago, and $1,000 lower at $1,000, we had a very similar situation where the gold chart or the gold price basically tried to break out above $1,000 with a monthly close above 1,000. And it took ages back then, also like 1.5 years, I think. And finally, once there was the monthly close above $1,000, gold took off, and we've seen a very quick 25% rally. And that's actually very similar to what I see right now. So I think we're maybe now in November seeing this monthly close above $2,000, and that will trigger gold to run towards 2,500.
Why is that? Is that because a close above 2,000 converts 2,000 from a ceiling into a floor?
Yes, that's one thing. You have a lot of trend followers, momentum traders in the market. You have a lot of hedge funds waiting for that signal. And it's a confirmation. I mean, it's a round psychological number. And a monthly close above that, gold has not managed to do this over the last 3 years. We've been running against it. Yes, the all-time high sits at 2,075, but a monthly close above the round number of $2,000 has not happened yet. And last October, like just 2 weeks ago, it missed it by $15. So,
why do you think that is? Some people talk about market manipulation, or is it just that the market doesn't yet have that last little bit of confidence to move higher?
It's probably a mix of both. I'm pretty sure that certain players try to manage the gold price, and they try to do everything to keep prices lower and below that round psychological number. But then again, also, I mean, if you bought in early October and then you had this 3-week rally in the gold market, $200 higher, it's time to maybe take some profits, right? So if you talk with the guys who bought at 1820 in early October, they were happy to take profits at $2,000. That was their target. So I think it's a mix of both. Yeah.
That also perhaps suggests there's still a big element of short-termism in the market, where if you got a profit after a month, okay, we're done.
Right, of course. And in such a long consolidation in which we are in now, we're consolidating since the summer of 2020 between $2,000 and $1,600, and we're consolidating since basically 12 years around the $1,900 level. People tend to do more short-term trading, you know, like show me the money, give me the quick gain, better than to sit 6-12 months in that position and give everything back. So I think that's also an attitude which is understandable.
A number of speakers at this event, at this conference, have been focusing on the US dollar and what's happening there. The US dollar has maintained relative strength through much of the year. Maybe we're now starting to see the breakdown of that. The US Treasuries auction last week was not a good one. We're going to start seeing weakness in the US dollar, which would presumably benefit gold.
Yes. I think that the dollar has topped. I think from here forward, I don't know for how long, but I think there's considerable, actually quite a lot of downside now for the US dollar. Mainly because the world is realizing that the debt situation in America is unsustainable. You have basically all the numbers, all the statistics are now becoming exponential, right? I mean, if you look at the debt levels, if you look at the interest payments that has to be done, it's all getting exponential. So it's unsustainable, and I think the world is shifting now towards that view for the next few months at least. So I think we're going to see a lower dollar, and that obviously will support gold.
It seems there's an increasingly hostile environment out there, so economically, but also physically. There's two conflicts raging on the borders of Europe. Gold has often done well in times of conflict, but hasn't really responded positively to the two wars going on.
Well, I mean, we have a big gap in the gold market, which actually still is a little bit of a concern. And I call you can call it the Hamas gap, because it happened after the invasion of Hamas over that weekend in October. And then on Monday morning, gold opened up much higher, and this gap has not been filled. And gold, I mean, this geopolitical event triggered the gold rally. It was $200 within 3 weeks, and gold clearly played a kind of like safe haven character in that time. And something similar we've seen last year in March when Russia invaded Ukraine. Also had a strong gold price running up to $2,070, just slightly missing its all-time high by $5. But of course, like, these geopolitical events tend to have more like short legs and do not like support the markets for weeks and months, because at some point people are getting more like bored of that story. They don't want to hear all the time war, So it's kind of like priced in the market. But I think it's now different in other things that trigger the run higher in gold. As I said, the situation with the US dollar, the unsustainability of the debt situation in America, and generally, I think one safe haven play that will come probably next year is that the general stock market will have more problems, I assume. So that could also trigger a flight into gold. I could imagine next year we're going to see more stress in the banking system again, maybe a few more bankruptcies like in March, and that could trigger actually a run into gold.
Now, the gold equities are in the doldrums, and they could certainly use with a bit of a Midas touch. What do you like in this space, or where are you focusing your attention?
Right. The problem with the mining stocks is that most of them tend to not be a good, very long-term buy and hold investment. It's a very cyclical business, and even though the mining company might report really good news, earnings, drill holes, whatever, the stock can go down 40-50% just because there's no liquidity in the sector. And that's very painful for people, and most of the mining stocks tend to bet on mining stocks because they believe in gold and silver and think like, I can buy the stocks with a leverage, let's do this. But you need to be very selective and careful in your timing. You need to have a supportive gold price, and usually gold needs to move first. And hopefully it looks like we are now at a situation where an investment in the mining stocks really makes sense. I've been very much cautious and hesitating over the last 2 or 3 years when it comes to mining stocks. I think now it looks better. I like more of the smaller producers. I would still wait with like the exploration and really small junior and developer stocks. Usually the sector in a bull run in gold and in precious metals sector, usually the sector plays first the big names. That's your Newmont, Barrick, Agnico Eagle, and maybe some of the larger royalty stocks. But assuming that gold will maybe go up to 2,500 by spring next year, I liked a little bit smaller producers like Victoria Gold and a Max Silver, for example.
You see more leverage there?
Yes. And you still have a very favorable risk-reward ratio. So you can probably easily make 100% while the downside is rather limited. While if you try to pick one of those exploration stocks, I mean, there's hundreds of them. And I don't think we are at that stage in the cycle where they all suddenly get pushed higher. You know, it will come later. And you will have your 10 beggars and maybe even some 50 beggars, but you also need to find those among hundreds of mining stocks. And for that, I think we need to have a more established new bull market, and we're not there yet.
As people will have to wait a lot longer to get those.
In the small, very small mining stocks, yes.
Okay, so what would you say is a healthy investment strategy for people at these times?
Well, obviously, you need to have a decent cash position, even though inflation might take away the purchasing power. I think it's very important to have a decent liquidity cash position in your bank account, but also some paper banknotes at home. I would definitely recommend, generally speaking. I would say, I mean, that's been what I've been saying for years and years. At least 10% of your net worth should be in physical precious metals. 2/3 in gold, 1/3 in silver is a general rule. If you want to be more aggressive, you can increase the silver allocation. But your overall net worth should be 10% in physical precious metals in your own hands. So not a GLD or any other ETF, preferably one bars, coins that you hold in your own hands, that you can put in your own vault, in a vault outside the banking system. There is enough private companies offering those kind of services. I think that's your wealth protection kind of basic strategy. I also recommend to have a little bit of Bitcoin allocation. I would say 1 to 5% you should have. I then like to have probably 25%, generally speaking, in a healthy dividend stock portfolio. So these are big blue chip companies that paying a nice yearly or quarterly dividend that create that cash flow that you will need. And then the rest, maybe you should still wait a little bit for more clarity in the markets. So I'm a big fan of generally having cash and liquidity at the sidelines because we're in a very uncertain time. I think we're going to have a hard landing. We're going to see a recession most likely next year. But it could also be like what we've seen this year. At the first sign of stress, and I mean, we had a bank run in America in March, right? But if you have these kind of signs of stress in the system, it could take one weekend and they come up with the next bazooka in terms of money printing, and you wake up and prices going through the roof because they printed a few trillions, you know? Like that's what's coming. That's very obvious because you have to understand that every rescue package has to be bigger than the one before. So they injected how much, 400 billion in March over a weekend. The next rescue package will be in the trillions and quadrillions, and that will put us all on a path of inflation or hyperinflation mentality or psychology. So you want to be invested to partially, but you also need to be aware that it is quite scary as well at the moment. I hear a lot of high net worth people complaining or actually expressing their fear about this situation because in many businesses, suddenly revenues breaking down. Now we see more and more companies have to kick people out of their jobs, basically. It feels in many ways like we could be in front of the next financial crisis. So you need to be ready for both situations. A hardcore crash, hard landing like in 2008, and at the same time a very quick turnaround and suddenly even higher inflation. So and then obviously markets running away because of higher inflation. So it's a tricky setup. I think precious metals should be one of the cornerstones physically and build up from there.
It has been a tough year, but we're coming to the end of 2023. What do you think will happen next year, and what do you hope will happen next year?
I think that, the stock markets are trying to get this kind of like year-end rally going. A year ago, the sentiment was so pessimistic that it was kind of like obvious that we should get some form of a bounce or recovery that has lasted longer and took the markets further than many have expected. AI boom obviously has helped with that, but the breadth of the stock market is not very big. So we have 7 stocks basically bringing everything up, and I think in January, most likely stress will come back into the system, and so I'm afraid that actually very quickly 2024 could become very stressful for many people in the markets. I think that gold has a good chance to make a new all-time high by spring next year. And then depending on the central bankers, how fast they react with the money printing, we might either move into a larger, maybe 3, 6, 8, 9 months bear market kind of situation again, or they will print so much money that we are back on the way to a really high inflation number, and maybe they can unleash the party again with their money printing, at least for a short period of time.
It sounds like it's going to be a hell of a ride next year.
That's for sure.
Florian, thank you for joining us today.
Thanks for having me. Pleasure.
This is Paul Harris for Kitco Mining at the Precious Metals Summit in Zurich, Switzerland. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Precious Metals Summit in Zurich is brought to you by Vizsla Copper.